What's up, Banter fam? Welcome back to the show. Today, I want to discuss a key Bitcoin pattern which could be signaling the next big move in crypto. We're going to take a look at that and then also how that factors into the altcoin market and if it could be indicating an upcoming altcoin rally. I also want to run over the earnings because we had major tech stock earnings come out over the last day or so. We also had US GDP numbers that we need to run through because it is going to affect the probability of rate hikes and rate cuts heading into Q3 and then Q4. And then, of course, at the end, as usual, we will talk over all the altcoin stuff. We'll look at some altcoins that I'm looking at accumulating, look at some setups for those alts, and you guys can also ask some questions at the end and we can just hang out and have a chat. But before we get into all of that stuff, let's go through the earnings. Amazon actually beat expectations in the first quarter and shares jumped 11%. So it's funny because going into this week, there was a little bit of de-risking pre-earnings. That's why we saw the market pull back slightly. But what we're seeing now is earnings are actually beating expectations, and that has resulted in the NASDAQ rising 2.5%. We can see Microsoft as well also beat expectations. We can see here they beat expectations for their quarter, and we also saw Alphabet for Q1, which is Google, also beat expectations. We saw Meta as well, which has had many consecutive periods of negative growth, finally have a period of positive growth. So they also beat expectations. So basically every single company beating expectations, which for the stock market has been quite good. And it's resulted in decent performance in the NASDAQ. As for the S&P, we haven't really seen the markets move much. I'll actually get up the S&P chart right now and show you how things are looking from a macro perspective. The tech stocks have been the major movers off the back of earnings, but the S&P, although, it has made a move, it is heading into resistance here at 4,100. The S&P right now is very range bound. It's been in this range, of course. We have had price action either side of the range. I consider this top at 4,300 to be deviation. Largely, the majority of price action has started to condense into this range. A breakout to either side would obviously be decisive and largely spell a huge move. But until we get like a confirmation breakout for the S&P above the 4,200 level, then I think, for the time being, we can just assume we're range bound. At least that's where we've been since last November. And then as for the NASDAQ, it's also had quite a big rally from its yearly lows. It is up 23%. Obviously, strong earnings have been a contributor. Forecasted rate cuts next month or next quarter, because we're still getting one more rate hike, then a pause, then a cut. That is the current expectation, has also been a contributor as that's shifted the curve on the interest rate decline slightly forward, and that has meant the stock market has performed well. But I guess it would be, remiss of me not to note that we do have the S&P and the NASDAQ both heading into resistance. Doesn't mean it can't break resistance and move to the upside, but, you always got to be wary, like FOMOing into massive pumps. And the reason I want to look at stocks is because it is a large driver of general sentiment for risk on assets, crypto being one of them. Of course, Bitcoin has slightly decorrelated in recent times. It's traded more like a digital gold. And we've also seen gold pump subsequently in the midst of, banking fears. We had Silicon Valley Bank collapse, and that resulted in a 50% move for Bitcoin to the upside. We've also now seen First Republic Bank starting to have some issues. So the Bitcoin catalyst can be obviously risk on assets performing well. But in recent times, it's also shown that general market fears of contagion in the banking system can also be a catalyst for Bitcoin. I wonder how long that narrative is going to sustain. I wonder if this is a new paradigm for Bitcoin finally starting to be treated as a digital gold, or whether it's just super short-term speculation. My personal opinion is that we're leaning towards the latter. However, one day I do view Bitcoin as a digital gold alternative. So at some point that decorrelation needs to happen. When it happens, we don't know, but maybe we're just starting to see the signs a little bit that Bitcoin can be treated in that respect. But, I'm not going to get too bullish on that narrative yet until we see some more concrete evidence that Bitcoin actually behaves in a risk-off environment for equities when gold is performing well. Then I think we can come to our thesis that Bitcoin is becoming, digital gold. But equity still holding up relatively well in the midst of banking contagion fears also does help Bitcoin's case a little bit in terms of price action. So just to summarize, stocks have performed really, really well. And with stocks performing really well, At first glance, you may think, okay, this gives the Fed license to keep hiking rates, because if the biggest companies in America aren't getting affected, they're not going to complain. The economy's still performing well because people are still buying goods, they're still buying services, and all these companies are performing well. So let's keep hiking rates and let's try and get inflation down. That would be kind of the first thing that my mind would jump to, and maybe your mind jumps to as well. However, although these companies are posting positive periods of growth, that is like a lagging indicator. It's a few months behind because they're reporting on the previous quarter, which is Q1. If we actually look at GDP for Q1, and although this is lagging as well, there's a discrepancy between the stock market and the overall performance of the economy. Now, I don't know whether this is because expectations for tech companies were just really, really bad and people were fearing the worst, fearing interest rates were going to really affect their bottom lines. I'm not sure, but actual real spending in the economy, real productivity in the economy, although it did rise 1.1%, this is significantly lower than we've seen in previous years. And of course, with rising interest rates, you do expect this to be lower than a pandemic environment when you're printing money willy-nilly and everyone's just spending stimulus checks. And that's where we saw these crazy months of 35% GDP growth and 6.3 and 7, completely unsustainable, fake, inflated periods of growth. We did see 2 periods of reduction before going back into a surplus, but now we're starting to see the economy tick downwards. So although stock market performance may indicate the Fed might want to hike some more, the fact that GDP is quite weak, I feel like this is the bigger number than like specific anecdotal, and it's not anecdotal because it's data-based, but specific small sample size cases of stocks performing well. So US GDP coming in quite bad, this is a bad economic indicator, is actually good for the thesis that the Fed is going to cut rates. If we actually look at the semi-probability here, we can see the likelihood of the next rate hike actually increased. So let's just let this load. I think it was roughly like 78% when I went to bed last night, and now it's 87%. So the market now really expecting the Fed is going to hike another 25 bips. Expectation for the next month is a rate pause. There's a chance that they hike again, but we're not necessarily certain on that. There's a chance, but we're not certain. So let's see. I'm pretty sure they're going to hike, pause, and then cut. And that kind of is what the market is expecting. So bad data, although the probabilities did increase, bad data in general is good for things like Bitcoin, because it kind of puts a limit on how aggressively the Fed can hike rates. So although bad data at face value, the first conclusion we can come to is it's going to crash the crypto markets, it's going to crash the stock markets. It's kind of working the opposite of that recently. Actually, bad periods for economic growth, because of the limitation that puts on the Fed's ability to hike rates, has actually resulted in crypto pumps and crypto rallies due to this pivot narrative. Whether when we actually get a pivot, the market keeps performing, that's another thing. But the market is forward-looking. So if the market's forward-looking and it's expecting a pivot, then Bitcoin can perform well. But as I said, stocks are kind of heading into that slight resistance territory in the short term. So what about Bitcoin? Because Bitcoin's different. Bitcoin is your hyper risk on asset. Bitcoin is your kind of exposure to risk on. It's like pure exposure to risk on, but it also has this cool element of kind of being a flight to safety at the same time. That's why it's a pretty fun asset to trade. If you're trading Bitcoin, and obviously off the back of that altcoins, because there's kind of 2 environments that it can respond to. It can respond to economic worsening conditions, or it can respond to positive economic conditions through positive risk asset performance. So in terms of Bitcoin right now, and in a few minutes, I'm going to go through the title of this video, which is the key Bitcoin pattern I'm looking at to verify where we are in a macro perspective in terms of this cycle versus other cycles. But in terms of current Bitcoin price action, we actually have seen Bitcoin hold quite strongly above this diagonal. So we actually had a retest of my blue box. So if you were trading this box, I've been talking about it for the last couple of weeks, you would have caught a long here. I took a small long. I didn't go too crazy. We did get 2 retests, so we had a couple opportunities to top up with stops below. If you did get into any trades, then just make sure to move your stops up to your entry to make sure you make some profit. Good morning as well to Ocho there. Thank you. I'm glad you're enjoying the alpha. Coming live from Australia, of course. but yeah, so this kind of blue box, if you did take a long, make sure you move prices up. I didn't go huge in this zone. I mean, I wish I did in hindsight, because it was actually a very good zone to trade. Many altcoins bounced 15, 20%, but it's, it's very difficult to get your full entry. I was still cognizant of the fact that we could have broken down and had a bearish retest back down to range highs. In that scenario, I wouldn't want to be overexposed. But right now I am looking at, cutting a small amount of these positions that I took, just because I want to take profits. I'm not fully confident heading into resistance to be max longing right now, personally. That's why I'll cut some profits. Obviously, I've still got my spot, which I'll keep riding. But Bitcoin, I think the key level for that now is 30,500. Once we break 30,500, I expect some explosiveness up to the 32K mark. And that 32K mark, it's likely that we kind of explode straight through and then come back down. Oftentimes with these key levels, 32K being one of them, what we sometimes see is massive pumps into this range, and then we'll see, deviation above, and then we'll come back in below. So it could actually go to 32.5 to 33. It could explode well above and then come back in and tuck down into that zone again. That is all going to happen if we can actually hold above 30,400. If you are a shorter, then 30,400 is probably a level that you could look to pick off on a short. You would need to be wary of this, which was deviation to 31, maybe ladder into shorts on low-ish to mid-level leverage. If you're a leverage trader, if you're a spot trader, use low leverage or spot short Bitcoin down to kind of the 29K level, and that would be your next zone to take profits on any shorts. So that's the Bitcoin setup, but in general, it's looking good for the bulls. So although you may get a scalp on a short around this level, in general, the setup's looking good for the bulls. The bulls, if you're looking to accumulate, just want to wait for pullbacks. You don't really want to FOMO into these pumps. On altcoins, we're going to talk about later. There's different indicators that I use to get in, mostly relative strength plays. Right now, the market is mostly Bitcoin-led. Altcoin relative strength, although they're pumping in USD denominated terms, they're not quite showing strength versus BTC. We can see that because ETH BTC is actually in a downtrend. So for alts, I don't think the alt season is here yet. I don't think it's the time to FOMO into alts personally. But things, as long as they're looking good for Bitcoin, at any turn can change for alts. And we have a couple indicators that will show that. One of which is ETH BTC, probably your major alongside Bitcoin dominance altcoin strength indicator. Actually had multiple bearish rejections off this orange trend here. You can see 4 rejections now to the downside. The inability to claim mid-range indicates to me, and these are my 2 zones, right? Because ETH BTC's range bound. For the time being, these are the 2 zones I'm looking at for a bounce or a short, or a rotation back into Bitcoin. Because we're below mid-range, probability suggests we are going to come down to this zone. For ETH BTC, probably another rejection here could take us lower. We might not quite get there, but I am expecting this general zone down here to come and be tested, which is the 5.7 zone for ETH BTC. In validation of that theory, because it's important to stay adaptive as a trader, would be a break above this orange zone and a hold above the 6.8 zone. Then you would look to rotate out of Bitcoin into alts with your TP zone set at 8. As I said, right now, probability suggests Bitcoin is going to continue to lead. We also see dominance looking very, very strong. Bitcoin Dom trying to push above a major resistance level as well. But until we kind of get this flip here, it's Bitcoin's time to shine. And it doesn't mean I won't trade alts. You just have to be way more selective about what alts you trade. You need to make sure you're in the really strong alts if you're trading alts. Otherwise, risk-reward wise, you may as well just go with Bitcoin, because when you invest in altcoins, you're taking additional risk. Because of their tendency to move more aggressively on upswings and downswings, you want to make sure, because you're taking more risk, that you're getting into the right altcoins, or else you could just hold Bitcoin, trade Bitcoin, take less risk, have less of a chance of getting stopped out if you're using leverage. If you're not, have less of a chance of instantly being underwater, and actually be able to sleep at night with lesser volatility. So whenever we're trading, we want to beat Bitcoin, especially for someone like me. With my goal being to stack more Bitcoin long-term, to stack more Ethereum long-term, I want to make sure whenever I buy an alt, whenever I trade an alt, the reason I'm trading that is with the mindset of making more Bitcoin or making more Ethereum. If I can't make more Bitcoin or can't make more Ethereum, well, there's no real point in trading it, because you may as well just invest in Bitcoin, Ethereum, and expose yourself to less downside if the market really dumps. So ETH BTC, that is my plan. So just to summarize, expecting 5-6, just based on probabilities of, unless we reclaim mid-range and this diagonal. If we break, right, if we actually do end up breaking, I will probably go much more risk on into alts. Right now I'm heavier Bitcoin ETH, but mostly Bitcoin. I'll go much heavier into alts at this level and look for this push up to this zone. But until we get that, it's still kind of Bitcoin's time to shine. But we'll get into some altcoins that are outliers in a second that are actually making some bullish trends on the Bitcoin charts. Because it doesn't mean don't get into all alts. It probably just means don't spray and pray right now. Of course, it's your choice how you trade, but getting into like 50 altcoins as a proxy to the general crypto market right now probably isn't the best RR. You might just want to be a bit more selective until we get indications of that alt season. But with Bitcoin dominance pumping, it's not really alt season time yet. 𝗕𝗏𝗚 also kind of alluded to this in one of his tweets. He's like a gem trader on Twitter. He said BTC dominance double bottom on the monthly chart still in play. So he's highlighting that we had a double bottom on the monthly. So if we go to the monthly, 2 major bottoms here into this blue zone, push up. Double bottom patterns sometimes result in breakouts. Usually you get a pullback to the neckline, which is this level here. And if you get that pullback, then that would be a sign that Bitcoin dominance wants to push up to 54. Kind of Bitcoin dominance looks like it wants to go higher. Like objectively, it looks like it wants to go higher. And for that reason, you probably have to park the alt season excitement right now. Because if 𝗕𝗏𝗚𝗏's theory is right, and this is a double bottom, and I've gone down to the weekly, what that would mean is a breakout, pump up to around 50, then a pullback. On that pullback, that is probably when you'd want to shift into Bitcoin, and then you're going to get that move to 54. So I definitely think we're going to get a pullback. I don't think it'll just be Bitcoin. You're going to get times like in this leg down where altcoins actually outperform. That would actually be, though, your chance to shift back into Bitcoin. On the ETH BTC chart, that would look something like this. Probably a pullback to this lower range, and then a push back into resistance at this orange line. And then that's where you shift out of alts back into BTC. And then that's when you get the dominance resuming. So there's likely going to be confluence between ETH BTC and BTC DOM. I don't just look at one indicator, I look at a few. So yeah, I would be looking at both in tandem with each other, as well as the USD pairs. And obviously I stream every day, so I'll keep you updated as this evolves. But that's where I think altcoins, that's how I think altcoins are going to perform, with the exception of a select few. Obviously some altcoins are going to outperform irrespective of Bitcoin. I'm just generalizing here, talking about the general altcoin market. There is also a scenario. So let's look at the bullish alt scenario on BTC DOM that it can't break above. If it can't break above again after testing twice, I would start becoming a bit more bullish on alts. So that would probably mean a pullback, a lower high. So technically this is a lower high because that was a high. If it stops right now, gets rejected, retests and makes a lower high, then okay, then we can start talking about alts. That's your scenario for alts. It's just wishful thinking, I think. In the short term, we really see it. Just looks like it wants to break. It looks like it wants to go higher. Look, but there is a scenario in the next literally probably 24 to 48 hours where this actually gets rejected again, and then maybe ETH BTC starts to make that move towards breaking this orange line, and then you know what the plan is there. On the retest and the flip of mid-range, we go long alts, hoping for this top zone. But, got to think probabilistically. Probability still that dominance keeps increasing for now. So that's kind of like the short-term alt stuff, though. That's super, super short-term. I want to talk more longer-term now in the context of this cycle, because I know a lot of you aren't just short-term traders. So, look, it's great to have short-term plans on alts, but you have to keep in mind that all of the last 10 minutes that I've been speaking has all been referring to like 1 month to 3 month kind of plays. So this is on a weekly chart, right? So if we actually map how many candles it would take for this to play out, it's probably 1 month, 2 months, 3 months. That's still pretty short term in crypto. Probably feels long because 3 months in crypto feels like a lifetime. But when we think about the broader cycle for cryptocurrency, then I think that's where the big opportunities are, because over the next year, you're going to get opportunities to really DCA into quality alts and set yourself up for potentially massive profits next year or the year after. We don't know exactly when we're going to get a huge Bitcoin blow off top. If this is the beginning of a new bull market, then we will definitely have more opportunities to accumulate. But in order to work out when the time is to accumulate, we need to understand where we sit in the cycle. We also need to understand Bitcoin's drawdown tendencies. So, if we do want to accumulate alts on pullbacks, how far can Bitcoin come back down for us to get entries, and how will alts respond in that environment? So that is what I want to discuss in just a minute. I've got a few charts to help contextualize that, and we'll kind of come up with a better altcoin plan that isn't so short term. But I think it's good to balance on these shows short term stuff for the short to medium term traders and the long term stuff, because you guys know that I trade a little bit of both. I use short term rotational narrative trading as a way to make more money in the short term, add to my stablecoin bags, add to my Bitcoin ETH bags. I've done pretty well since November. That's why I'm pretty heavy in stables. I would love entries to accumulate some of my favorite alts, still being very patient, but because I've been taking profits, my stablecoin bag's like quite heavy now. So if yours aren't, then that's okay. You just need to look to keep adding to them as you make profits, and then reinvest, long term in better opportunities. That's just how I trade. Bit of short term and also long term, which is mainly Bitcoin ETH, but also comprises of some select alts, some of which we'll talk about today, that are more geared towards long term games. So before we get into that stuff, I want to remind you just quickly that the trading comp started yesterday. I'm still yet to open a trade. I'm sorry. I definitely want to open a trade soon, but I just haven't seen the setups. There's a couple setups that I'm close on. I just didn't get to open it in the trade. The Bitcoin long I took was before the comp, so I don't qualify. And my P&L's not up on the comp because of that. Reptilian is actually up 300%, so he's currently in the lead to win a Tesla or $40,000. Then you've got this VIE. Number 2, 200%. He's currently winning the Rolex or 20,000, depending on how many registrants we get. Right now it's 6,000, but as more people join, that number will go up. And then third prize could be 10,000. As I said, right now it's 500, but the more people that join, the more the amounts go up as per the T's and C's you see here. We got the graph based on the rankings for participants. So if you haven't joined already, sign up. It's free to sign up. You do need minimum 250 to trade, but it's P&L based. So if you trade with 250 or you trade with 100,000, there's no difference. There's no difference because it's P&L based. So if you make 250 on a 250 portfolio, you're 100% in profit. If you make 10 grand on a 10 grand portfolio, you're also in 100%. So minimum is 250. It's P&L based, just to keep the playing field level. And yeah, good luck to everyone. There's a link in the description for the trading competition. You just need to click the link, sign up. I'm assuming most of you already have accounts. If that's the case, then you just click register now to join. So there's the link for you guys, and good luck to everyone that's trading in the comp. I hope one of you, Dennis, just signed up. Well done, Dennis. I wish you the best of luck. Hopefully you can do well in the comp. My goal in this comp, just to publicly state it, since obviously I can't win the Tesla, that's for the audience. My goal is just to beat the other hosts. Since I'm not a full-time trader, if I could just beat Ryan and Sheldon, that would be a very good result. My strength's more in, and you're probably going to notice this as the trading comp goes on. My strength's more in picking outperforming alts. So that's probably, I'm going to need to really pick some strong fundamental drivers within the next month, because it's a month-long competition. So hopefully there's some decent alts that have listings on ByBit that can perform well for me. I think that's where I'm going to get my edge on them. You've probably got better setup traders like Kyle and Sheldon who will look to scalp a bit more. But my method in this comp is just going to be patient, wait for good setups to develop, and then be really patient, use lower leverage. Maybe I'll mix in some higher leverage depending on market volatility, but in general, I'll try and use lower leverage, trade more levels, trade more high conviction. So that's taking one big trade a week instead of 10 little trades a day. And hopefully that sets me up. That's kind of my plan for now. That's my thinking. But on the shows, we'll kind of go over that over the next month. I'll probably stream on the weekend, or at least do a show on Sunday or something, maybe Saturday or Sunday. where we'll kind of start looking at setups for the Monday. And I've also got some setups later in the show, which are close, but not quite there today, but close. Okay, let's talk about macro now. So I introed this section before, and that's zooming out a little bit, looking at the macro trend. Now, look, charts like this, I'm not always a huge fan of because it's like very confirmation bias-esque, I think, looking at 2014, 2019, and then 2023, and, breakout. But I just thought this chart was pretty uncanny. So there are some charts which are a stretch, like your log stock to flow kind of charts with the rainbows and all that stuff, and it's kind of like very like confirmation bias bull run stuff that you can kind of manipulate to make it look however you want it to look. But this chart, I mean, this trend is pretty clear that you kind of reach your bottom, get a breakout, then you have a pullback, and then you're off to the races. In 2019, we reached a bottom. We had a very small pullback, and then we're off to the races. But that was in the build up to the next cycle, so you still had your pullback. It just happened slower, and then obviously you had the COVID massive dip. In 2023, we had our breakdown, then we had our breakout, and at some point we're going to get a major pullback. So the question is, how big will this pullback be when we get the pullback? Will it be like 2015 where we retest straight back down? Or will it be like 2019 where we pump now and then come back down? Because we know at some point we come back down. Which one of these is it going to be? And if it does, how big is the drawdown going to be? Well, what I've done is I've gone through each cycle and I've looked at the Bitcoin performance in each cycle to work out how big the drawdowns are from peak to trough. And this gives us a good contextualization of where we sit in the cycle. So are we in a bull market or are we in a bull trap? That is the major question. Well, there is one sign that indicates we're in a bull market through these charts, and that is the fact that every single time in Bitcoin's history, Bitcoin's cycle history, every single time in Bitcoin's cycle history, if Bitcoin is pumped 100%, so if the price has doubled at some point during the cycle, after the peak of the cycle, it has never reclaimed its low. So it's never gone lower than its previous low. So every single time Bitcoin's made a 100% move, it's never gone lower than its previous low. So, okay, let's look at 2014. We had the blow off top 2013. Then we had $66 as the low set. Then Bitcoin pumped more than 100%. Pumped more than a 12x up to its highs of 1151. Then it drew down back down to 153. This was a massive drawdown, massive drawdown, but it never reached its low. So although it pumped, this is like the beginning of a bull market, but you could call it a bear market rally. Although it was a huge rally, the drawdown never took it lower than its previous low. The next cycle in 2017, which I think we're mirroring more closely than 2014, this trend becomes clear as well. You had the pump, so the low of 3,000, the pump to 19.5, and then your low during that bear market was 3,159, but it never went as low as the previous low. So 100% move, which is actually 549 in this case, percentage move down 84%, but never reached its previous low. Now, if we look at the current cycle, we had our 100% move. So we went from 15 to 31,000 almost. That is 100% move. If we take the ideology of the previous cycles that when we do pump 100%, we don't make new lows, then what this would allude to is us, although we're likely to have a drawdown, very likely to have a big drawdown at some point this year, that drawdown won't take us all the way back down to the low. And if it does, we won't make a new low below 15. That indicates that the bottom is in. And probability-wise, I think you have to assume now the bottom is in, just based on stats. Now, there can be a black swan. There can be something crazy. And look, you have to have 5% of your mind share prepared for that. But I think we can generally assume that the bottom is in, generally. Now, if that is the case, then you want to be buying dips. So if you assume the bottom's in, then any big dip becomes a buying opportunity. Why? Because this is the beginning of an uptrend. So big dips equal accumulation for uptrends. Now, we know that we do get these dips. This isn't just going to run away straight to 100K again. We got a big dip in 2015. We got a big dip in 2019. It took longer, but we still got it, right? We get big dips in this market. So my thesis is to always buy dips. So, okay, let's assume we're in an uptrend. Yes, we can get major pullbacks, but that's still a macro uptrend, which means buying dips is what you want to be doing. If your thesis is that we are in a new uptrend, if your thesis is this is the biggest bear market rally ever, and we're going to go right back down to 15, then maybe you have a different thesis. Now, I'm a bit more bearish than some of the other banter hosts. I know Rand's more bullish than me. Sheldon's certainly more bullish than me. I think Kyle and I maybe are a bit more aligned in the sense that Kyle's relatively bullish, actually, but and I'm bullish as long as price action holds, but I'm not like ruling out a big dip this year. In fact, I think we probably at some point do get a big dip this year. The question really becomes, does Bitcoin keep running now and then we get that big dip? Or does Bitcoin dip relatively soon and then we resume trend? That is really the big question. For me, it doesn't really, you don't even need to really predict that. You don't really need to answer that because, look, if we do get this big rally, it's not going to just go in a straight line. At least I hope not. Odds are we are going to get pullbacks into zones that you can just buy dips on. So as long as we keep making higher lows, so if we do pump to 33, come back down to 32, you buy the dip, go to 35, come back down to 33, you buy the dip, and you just keep setting your stop losses below the previous lows, and you kind of play the ladder game. So you kind of want to ladder up. And then you have invalidation. So if we break down and start, showing bearish momentum, then you can look to exit the market or exit a percentage of your positions and rebuy around 24 to 25. That's how I'm playing things right now. So I'm still obviously long. I've got quite a lot of stables in case we do come back down. But I'm also happy to take longs on retests. So longs on pullbacks, on strong alts and Bitcoin. When Ethereum breaks, like we discussed before, then the percentage alts versus Bitcoin will go up. For now, it's not as high as it typically would be due to the fact that BTC.D is looking so strong. So that's the general trend here. I also wanted to talk about, before we get into altcoins, because, if we are in an uptrend, right, then you have to get the altcoins that will perform the best on major pullbacks and the strongest alts that will perform the best. So we're going to talk about them, but I also wanted to talk about something really interesting before we do that, and that's the DXY. That's the US dollar index, because when we think about crypto trading, we're often denominating in, we need some alts or high caps looked at. Yeah, we're going to do that. We're going to talk about some alts in a sec. I'm just looking through some of the comments as well. More streams, fine, you go. Cool. All right, we'll answer questions at the end. But I want to point something out very interesting with the dollar. The dollar's in a downtrend. This is bad. The dollar looks bad. And when the dollar's dying, that is not bad for crypto at all. Well, it means that in US dollar terms, Bitcoin and other currencies are denominated higher in their US dollar value. And that was kind of like 𝗵𝗵𝗫𝗍's thesis behind, why Bitcoin could hit 1 million. Obviously, it was a marketing stunt, but the thesis was not Bitcoin has some crazy pump, but we actually see US dollar devaluation. We've seen in Argentina, Bitcoin hitting all-time highs now. So it's kind of a perspective shifter to stop thinking about Bitcoin as just like a moneymaker to make more US dollars. And, start thinking about Bitcoin more, if you believe in it, as a way to make more Bitcoin. Of course, I want more US dollars. US dollars, although they're devaluing over time, they're valuable in the sense that short-term liquidity is king for opportunities. If that's crypto, if it's stocks, if it's real estate, you need liquidity. But, obviously you don't want to hold US dollars. Your life goal isn't to make more US dollars and just build up a US dollar bank account. Your goal is to buy hard assets. Like my goal is to buy hard assets. Like Bitcoin, I view as a hard asset. Real estate, some stocks. You want a diversified portfolio, right? That's the goal. That's the end goal for most people. And for you, it's probably like, you probably do want real estate, right? And you see crypto as an opportunity to outperform in the short term, which I think will be the case, and then invest in these things later when you have enough money. If you have millions of dollars, it's very easy to make a decision on where to invest rather than trying to rush into it first and then try to make money later. You need to make money first. So the theory behind the US dollar collapsing is that if you're in Bitcoin, Bitcoin can actually hit all-time highs without even like pumping versus other assets. It's just pumping versus the US dollar. And the US dollar is not looking good. But there was a very interesting trend that we're starting to see. And it's kind of been touched on a lot, and I've talked about it, and that's the US dollar actually starting to be kind of not used by other countries to denominate trades. So a lot like China, Brazil, Russia, a lot of them have been now trading in other currencies, and we've seen this theory that the US dollar could no longer be the world's reserve asset. That's a scary thing for US politics and US economics, which are both interlinked. Druckenmiller is, and if you don't know who Druckenmiller is, just to give you a bit of insight, he's actually shorting the dollar right now, and he has the view that the de-dollarization is going to kill the US dollar, at least in the medium to long term. But he's also actively short the US dollar. Just to give you an insight into who he is, and this theory is, he's a very famous multi-billionaire hedge fund manager. He is the former chairman of I don't know how to pronounce this. This is a struggle. I'm not even going to try. Which he founded in it's a hard one to pronounce. That's really hard to pronounce. Can anyone break that down phonetically for me? Which he founded in 1981. He closed the fund in August 2010. At the time of closing, it had $12 billion in assets. He's a lead portfolio manager now at the Quantum Fund. Now, this is the interesting part. In 1992, he and George Soros, another very famous investor, famously broke the Bank of England when they shorted the British pound in 1992, making more than $1 billion in profits in an event known as Black Wednesday. They calculated that the Bank of England did not have enough currency reserves with which to buy enough sterling to prop up the currency, at that raising interest rates would be politically unsustainable. He left in 2000 after taking huge losses in technology stocks. So he ruined it later, but look, he's still a multi-billionaire, and his biggest trade was shorting the British pound. So it's funny that almost 30 years later, after his very famous his very famous British pound short, that he's now starting to take aim at the dollar. So it's almost like deja vu. 30 years later, he is now taking another trade on shorting a currency. And I really respect Druckenmiller, obviously one of the most famous and well-known investors of all time, despite my inability to pronounce his fund. People kind of follow him. And to be honest, a lot of people have been shorting the dollar because he's been shorting the dollar. So it's one of these like narratives now that's starting to develop. So he said that he's betting against the US dollar as his only high conviction trade in what he believes is the most uncertain environment for markets and global economy in his 45-year career. So he's not even long stocks or equities significantly. His biggest trade, largest trade, is actually shorting the dollar. That's where he's putting his bets right now. Druckenmiller, who as George Soros' right-hand man helped break the Bank of England in an assault on the pound in 1992, said he felt confident taking a negative position against the greenback because of his dim view of US policymaking. The dollar, which rallied strongly last year, has already declined 10% versus other assets, but Druckenmiller believes it has much further to fall. He says, one area I'm comfortable is shorting the US dollar. 𝗕𝗐𝗔𝗐. 𝗕𝗐𝗕𝗧𝗐. I don't know if that's right. It sounds wrong. 𝗕𝗐𝗕𝗧𝗐. Everyone's giving me different pronunciations. No one knows how to pronounce this shit. Duquesne. Why does his fund have to be so hard to freaking pronounce? Duquesne. I know that doesn't sound like Kane, but I don't know. I really don't know. It's difficult. It's so funny. That's actually a hard one to pronounce. Duquesne. I think it's Duquesne. It's not 𝗕𝗏𝗧𝗎, it's Duquesne. Yeah, Duquesne. Okay, we got it. Yeah, I actually know someone with another French name, and their last name's pronounced Kane. So, you're saying Duquesne. Okay. I think it's Duquesne. Anyway, that's really not the point. He said that he's comfortable shorting the US dollar. Currency trends tend to run for 2 or 3 years. We've had a lot long to run higher. And he actually said that the reason why he's shorting the dollar, 𝗕𝗏𝗧, is because of non-USD trade deals and expectation of lower interest rates. So it's a two-pronged short. The first factor is the thing that I mentioned, which was trade deals. So, Brazil, China, Russia, France, BRICS, basically starting to dominate trades in other currencies, settle in other currencies, starting to look elsewhere for trades as kind of like almost like a geopolitical weapon. And then also that the lower interest rates are going to hurt the dollar because it's now less attractive with interest rates going lower for foreign investors to park their money in the US, because with higher interest rates, right, you can park your money in the US, make like a 5% yield on treasury bills, and that becomes more attractive than doing it in your local jurisdiction, which may have a much lower percentage yield on dollars. And through doing this, you're also exposing yourself to what is viewed as a strong currency, US dollar. But now with interest rates going lower, the attraction of investing in US bills has declined because you're no longer getting that yield. And with the US dollar's, I guess, world status seemingly weakening, the yield also going down makes it much less attractive to, like, as an overall package to invest in the US dollar. So he thinks that's going to be one of the reasons why we see a US dollar decline. Whether he's right or not is another thing. But it's a very interesting thesis. And if he's right, inherently it's going to be good for Bitcoin. Why? Because, well, okay, maybe in real terms, maybe Bitcoin yen won't make all-time highs, but if the dollar keeps going down, we're actually going to see Bitcoin like a run to like 40, 50K and versus the US dollar. Even though maybe in other countries it hasn't even gone up. It's weird how that works, but you have to remember currencies are assets too. If the dollar goes down and Bitcoin stays the same, Bitcoin's price actually goes up. So it can actually hit 100K. And this was 𝗲𝗚𝗚𝗚𝗚 $1 million Bitcoin thesis. Like Bitcoin can hit 100K. And it doesn't even really need to become, it doesn't need to do anything. It just needs to have the exact same level of buyers and sellers, and the US dollar just needs to just inflate or decrease in value, and then you see Bitcoin going up. And that's actually probably what's happened over the last couple of years. Like the money supply's increased so much that, okay, it seems like Bitcoin's at 29K, but actually there's double the money supply that there was in the market versus 2020. Now, inflation isn't up 100%, but it's up close to 40, 50%, maybe 30 if you're real conservative, or 25, irrespective. The real value of Bitcoin versus 2021 is like 20K. And if you're if you're in the camp that inflation is actually much higher and you think currency's deflated 50%, then the real value of Bitcoin is actually 15K versus 2021, right? So like it's actually a bit of an illusion, the 29K Bitcoin thing, because you think, oh, it's gone up 100% from the bottom, but it's actually probably even lower than it was at 15 in 2020, just because so much money's been printed and inflation's up. So in real terms, in inflation adjusted terms, Bitcoin is probably sub 20K now, and it's probably in the 15 to 20 range, depending on how aggressive you want to be with your inflation models. So yeah, it's super interesting to think about it like that. And that's why, Bitcoin 100K, Bitcoin $1 million is not a meme. It's probably, as long as Bitcoin is trusted and doesn't have some huge like quantum hack or some big issue, it's probably why it's inevitable Bitcoin's going to hit those levels. So if you're in America, then and you're earning US dollars, then investing just in Bitcoin and holding it long term, I don't think it's the stupidest thing to do, because you're still going to make money versus USD. And although price of goods and services are going to keep going up, you're going to be protected. So that's the other theory behind why Bitcoin can go even higher. But now let's talk about alts, because that's enough Bitcoin macro talk. It's enough US dollar talk. It's very interesting. But I think it's time to have some fun. So Mars has so much energy / power. Spunky MFer. I just went to the gym, still riding off the caffeine high. I do get quite tired. I usually crash after the shows because an hour of talking. I don't know if any of you stream, but an hour of talking on stream is actually quite tiring mentally. Like afterwards, it's like, fuck. you actually get really tired. I obviously enjoyed the streams, but for some reason it's tiring. So since we're going to be talking about alts, you can drop questions in the comments. I've got some pre-planned stuff, but I'll also go through the questions as well as we go on. Before we do that, and while you're asking questions, if you have any, I want to remind you about the OKX giveaway as well. I know I talk about this a lot, but got to remind the viewers that haven't seen it that we're actually also giving away a Tesla over there. So difference is ByBit Comp, to win the Tesla, you have to obviously win the P&L battle, right? So that's like a competition of skill. So if you're a good trader and you back your skill, you can win prizes. Very good comp. But the OKX deal, you can win a Tesla, but you don't even need to be a good trader. You just need to get volume and get lucky. The minimum volume you need to qualify is $1. So you just need to put $1 into your derivatives account and open a dollar trade, technically, and you can win a raffle ticket. But to win the Tesla, the more you trade, the better in terms of your chances of winning the Tesla. So every 10K in trading volume, including margin derivatives volume that you generate, the more raffle tickets you get, the more tickets you get, the higher chance you have of winning. So the Maldives holiday has 3 more days for you to qualify. So if you haven't traded on OKX, now would be the time to open a couple trades if you want to qualify for this. It's a $7,500 prize that I'm giving away on Monday on the show, or maybe Tuesday, one of those days. And that will give you either the holiday if you want the holiday, or the $7,500. And then the day after, so on the Tuesday, the Tesla comp's kicking off. And this goes for 3 weeks. And over these 3 weeks, if you build up volume, you are increasing your chances of winning $50,000 or a Tesla. Freaking insane. Insane. Like, I know people are like, oh, it's a shill or whatever, but like, name another YouTube channel. Seriously, think of one that is giving away over $100,000 worth of prizes in like the space of a month. It's insane. Like literally $100,000. It's insane. We'll get into alts now though. But of course, if you want to enter the OKX giveaway, there's a link in the description, first link, and for ByBit, there's the second link. This is like the craziest month I think we've had on Banter in a year for giveaways. So just letting you know about that. Joby, keep up the good work. We won't forget. Appreciate you. I know you're here every day, sometimes really late where you are, so I appreciate that as well. I want to rock the boat. I get good alpha. We love your accent. Ran said he hated my accent, but I'm a very strong proponent that the Australian accent is more listenable than the South African accent. I'm actually getting a bit sick of South African accents, to be honest. Probably because I'm hearing them every day. But maybe they say the same about me. I'm not sure. All right. US people can't play. I don't think you can trade derivatives in the US, no. But yeah, I won't suggest to use a VPN because that would be illegal. Great ideas to make the journey exciting. Yeah, I mean, guys, so many opportunities over the next 6 months. That's what you got to realize on alts. It's nothing. You haven't seen anything yet. There is going to be probably some insane periods, and we got to prep ourselves for those periods. So, yeah, you guys ask questions in normal sentences, and I'll. That's what Manny said, and we'll get on with the rest of the content. Okay, first one's render. All right, this is one that's on my accumulation list. Why? Because Rand spoke about this on my show yesterday, but because a lot of AI projects in crypto are like very loosely correlated to AI, like VCs and funds, if they want AI crypto exposure, they're not so comfortable investing in them. Whereas like something like a render, it's like a clear GPU play. It's run by a good team. It uses machine learning. So it's not an AI company, but it uses machine learning. And like there's a very linear way that AI can factor into GPU. So I understand that the value prop, it's at a 1.2 bill fully diluted. Look, obviously we only want to buy major pullbacks. So the whole theory that I discussed before was, all right, if you think we're in an uptrend and you want to buy alts, then you need to find good pullbacks on these alts. So render for me, we're going to need to get better entries than this. Unless there's a big breakout on the 2.5 and then we get a retest, then we're in price discovery and we go even higher. It's not all-time price discovery because we have been way higher in the bull run, but I'm talking about like, bear market price discovery. Probably not relevant though, because some holders are probably still underwater and they'll dump. That's the thing you got to understand about old coins. When I say old, I just mean coins with like historical data from the bull. There are still people that bought at $4, $5, $10 that put a bit of pressure on the token. That's why it won't be just a straight run up. And we will get pullbacks. And when we do, I think they're good buying opportunities. 130 to 150 for render. That is your like major horizontal that you want to buy. The other thing about this level for render is technically if, let's say, we do get a test of this, it would be, I don't think this is happening, by the way, but at some point we might get it. It won't happen like this, though. That's very quick. That would actually technically still be a higher low. That's actually good for render. So this would be a great place to buy render if we get an entry there. Now, it may not do it straight away, so my nose is itchy. We may get a breakout, pullback, might do something like this, and we might go higher for a bit. But, at some point, if we get a retest, we're going to end up making that higher low, and that's what I'm looking for, that higher low on render to accumulate some. You guys know Bitcoin pair is very important to look at. So we talked before, like we only want to get into strong alts. We only want to get into alts that are making uptrends on the BTC chart. Why? Because otherwise we're better off in BTC and we'll take less risk. What is render exhibiting an uptrend on the BTC chart? You bet it is. So this is why render for buying pullbacks is better than some other coins. So you've got the low here on BTC. You've got a higher low. You've got another higher low. You've got another higher low. The next higher low on a major pullback will be this zone. At the 5.7 to 6 zone on the BTC pair. So if we get this pullback on render BTC in confluence with a pullback, even if it's a bit shorter, even if we only go to 160, as long as we're in this zone on render BTC, I would be comfortable spot buying in that zone. So that is the level where render for me becomes a good buy, medium to long term. Of course, short term, you can trade this thing, but I'm not really interested in that. This for me is a long-term proposition, and as a long-term proposition, I want to get better entries, so I'm going to be patient. So that's one that's on my list. I'll answer a question and then I'll get on to the next one that's on my list. By the way, I'm not suggesting you use a VPN. I'm just saying, May 8th, you need a KYC on ByBit. So there's only 10 days of non-KYC trading on ByBit left until you'll need to KYC. I know it's unfortunate for US users, but that's just the reality of the current environment. There are other exchanges though, obviously, that you can trade in the US on. But you still have 10 days on ByBit. Suffer from FOMO on buying render now. Look, I do have a theory. In the market, and that's, look, if you don't have any exposure, Kenny, to a project, and look, this isn't specific to render, this is a general terminology. If you don't have exposure to a project and you really want exposure and you're really bullish and you love the fundamentals and you have conviction, then you can sometimes open your 20%, your 30% position of your ideal position size, and then look to DCA down later. That is for people that can't control FOMO. It seems like maybe you're one of them. And if that's the case, then look, if you really can't control your FOMO and you're a long-term holder and you have long-term conviction, then you can buy a small amount just to have some position so you're not sweating at night. And then you shouldn't be anyway, just in case. And then you can average down later. But the problem is, if you do make that decision, you need to make sure you want to average down later. Because otherwise you're going to get a terrible risk-reward entry. So if that's your plan, you got to make sure you have conviction. Because if you don't believe in a project, you're not going to have the conviction to keep averaging down, even if we go lower and lower and lower, and still accumulate to get your average cost down. So the biggest mistake investors actually make in crypto is saying that they're DCAing, but they're not buying lows. Because the whole point of DCAing is actually to DCA during downtrends, not uptrends. DCAing in downtrends, so okay, you don't catch the bottom. But sorry, my nose is like really itchy. I don't know what it is, probably allergies. But yeah, you might not catch the bottom, but at least you're getting your average buy price down. If you just keep DCAing during pump days instead of dump days, your average buy price ends up being higher, and it defeats the edge that maybe DCAing could give you. So just remember, if you want to get that early position now, you still got to be willing to buy it much lower, and be prepared for that eventuality if it happens. It may not, but if it happens. buy enough to keep an eye on it, then I step in. That's actually a good tactic as well. If you need like, because I find mentally for me, I need like exposure in something to be interested sometimes. If you really like a token, sometimes, you could get a really small buy, $50, $100, $500, however much, is small for you, and just have it in your portfolio just so you can track it. I know it sounds stupid because you can just do a watch list on CoinGecko, but sometimes actually owning some helps a little bit to manage risk and at least like stay up to date. Because once you have a financial incentive in a project, you're usually much more diligent with researching. I've found. So sometimes that's not a terrible decision. Crimson said he's late. It's all right, bro. It's okay. Because you can watch it back later. And now we're in the Q&A mode, so we'll get time to just discuss things together. Certain regions I never had access to ByBit. Yeah, certain regions you haven't. We do have other exchanges though. OKX, also BitGet in the description too. The next one is Rocket Pool on my DCA list. Why Rocket Pool? I did discuss the theory yesterday, but for those that didn't, here's the TLDR. Circulating supply, total supply, very good. So no dilution. Secondly, you need to stake a Rocket Pool. You need 10% of your ETH value to be staked or locked as collateral in Rocket Pool tokens to spin up a validator, right? So there's actually continuous demand for the Rocket Pool token. And so its tokenomics are very good, much better than Lido. The third thing is, if we look at where the inflows are going, even over the last day, almost 5% of inflows have gone into Rocket Pool, 5% into Frax as well. Frax is also on my long-term DCA list. So you've got these two projects which have basically like taken the lion's share of new inflows. It's not going to Lido. Percentage-wise, it's going to Rocket Pool and it's going to Frax. Now, this is percentage of Frax and percentage of Rocket Pool. So like net, Lido's getting more Ethereum. But since Lido's TVL is so much bigger, 12 bill, even 1,000 Ethereum doesn't move the needle on Lido as much as it does on Rocket Pool and Frax percentage-wise. Remember that. This is relative to the project's TVL themselves. But ETH, Shanghai was a huge catalyst for increased ETH staking. I expect the staking ratio to like almost double over the next year. If that is the case, where do inflows go? Probably Rocket Pool, Frax, Anchor, and Lido of this list. Which one has the best tokenomics? Probably Rocket Pool. Hence why Rocket Pool's on my long-term list. I'm not going to read this thread now because it might bore you, but this is a very good thread by _ETH if you have time to read it. And it basically goes through the June data for Rocket Pool. I'll actually summarize this, which is important. On Rocket Pool, the RE growth which is the Rocket Pool ETH staked growth, is up 10%. With deposits picking up as Kraken and Coinbase unlock their staked ETH. People are getting their ETH back from these centralized parties, and then they don't know where to stake them, and they're choosing Rocket Pool and Lido. So bullish catalyst for Rocket Pool. Yes, price-wise, people speculated on this for a while. That's why the token's up, but still a decent one to DCA into. Your next really good DCA level's 41 to 42. I think you get this at some point. Really, I do. I don't think it's going to run away from you. I also think, if we do get a breakout, and then if we get a nice retest of $50, that could also be a decent zone if you don't want to buy now. But you guys know my rules with altcoins now. This actually is an uptrend, so higher low, quite a nice trend. If you want to draw in a line, it won't look great because this wick took us too low, but it'll look roughly like this. As I said, not a very good trend line because it's just not accurate due to the volatility of the token. Also, why I don't trade Rocket Pool much on leverage, more of a spot buyer. But if you wanted to draw in the trend, it'd look something like this. So, momentum breaks down, then your next target would be this level. And if momentum holds, I would wait for a breakout and a retest, and then that would be my next buy zone. I am a holder of Rocket Pool. I already have exposure, full disclosure. But those would be my two major buy levels for that. The next thing I'm looking at, go to pick up your daughter in San Diego. Enjoy the rest of your day. Thank you for joining and hanging out with us for the first hour. So the Rocket Pool Bitcoin as well. I want to look at this quickly. You guys know as well, I want uptrends on the Bitcoin charts, or else I don't buy alts. Because you guys, I've said like 3 times this video. My goal is to stack more Bitcoin. Rocket Pool is actually in an uptrend. This is kind of like a double bottom. And then hopefully on Rocket Pool BTC, we make a higher low. So that is, look, to the bottom of this blue range, it's 5%. That might actually end up having, what's it called? correlation with the confluence, was the word I was looking for, with a breakdown on the USD pair. That would be my ideal accumulation scenario for Rocket Pool. We may not get it, but we have to talk about scenarios there. Of course, your long-term Rocket Pool $100 target, if it moons, is going to be your big breakout of RPL BTC. That may happen after some time. We may see something like this. Really rough idea, but we might come down, come up, work towards it, break down again, and then finally start to break out. Something like that. And then we finally get that big breakout after some accumulation. We want time to accumulate. Maybe we don't get it. Maybe we break out and we're long, but I hope we get this period to accumulate, because it's a token I want more of long term. And if we go real low, I've got conviction, so I'll buy lower. Joe's the next one. I talked about this yesterday. Trader Joe, as Rand said on the show yesterday, they've really done a good job at building in the bear market amidst what was a pretty difficult transition from AVAX to becoming a more multi-chain product-based project. They were very AVAX reliant. They were basically the DEX of AVAX. That's why during the AVAX rush incentives period, as you can see, the volume went crazy. The volume on Avalanche was insane. The daily fees were insane. The protocol fees were insane. And they basically just died after that because all these fees were manipulated. AVAX had all these incentives. Joe had crazy emissions. And what that meant was everyone was basically FOMOing and wash trading on the chain and staking Joe and locking it and pulling it. Even I was to make these crazy yields. And look, it was very lucrative for the LPers. But at the end of the day, that Ponzi kind of started to unravel. But as it unraveled, the dilution of Joe went up. So we're actually starting to reach our total supply now. And the FDV's starting to look a lot more reasonable. As our supply has started to max out. If we look at the market cap, it's still not max, still a bit to come, but largely most of the dilutions to come. If we look at the tokenomics as well, we can see it's relatively linear. So there's no huge cliff, no huge unlocks. We're around here in the unlock schedule, the most severe parts out of the way, bit of dilution, and then it's all clear, Joe, from a tokenomics perspective. So for Joe, if we look at the chart, on the market cap chart, it's actually super low. So let's just work CoinGecko. All right, so we can see Joe here hit a market cap peak of 500. It's performed strongly since its bottom. So that's why we're looking for pullbacks, but it has come off its high of 236 back down to 176. And now its FDV is 250. So it has come down, still roughly a 4x from its highs. I would like a little bit lower, but we're starting to get better looks at this. In terms of a few metrics to look at, if you disregard this and actually zoom in, you can see that there's been a big uptick in both fees and transactions on Joe now that V2's launched. So beforehand, no V2. Now we have V2, which is a huge upgrade for the way that swaps are conducted. New pools as well, give you some of the best yields in crypto. This has resulted in better fees. I actually don't own much Joe. I really don't own much. I'm a token where I'm not. This is a token where I'm not too fully in it. But it's also one that's showing relative strength. So all these tokens showing relative strength. That's why I'm not talking to you about 𝗲𝗚 or any of these coins today. I sound like I'm shitting on 𝗲𝗚 every week. I actually don't hate 𝗲𝗚. I just use it as an example because I know it looks terrible on the Bitcoin chart. So I use it as an example. Like this. This is not what we want. This is just, and there's a million coins that look like this. I could go through a million, but we don't want these downtrends. We want to invest in coins in Bitcoin uptrends. See how different that chart looks? Amazing. Way different. Even on a weekly or a monthly chart, we're still seeing higher lows. So here's your low, here's your higher low, and here's much higher. So there we could come back down on the weekly, whatever, but that's a buying opportunity. Because this is a long-term accumulation coin. So it's more about working out if you believe in it. If you don't believe in it, disregard it. But I'm kind of trying to frame the logic here for investing in coins you believe in. So this is, for me on the USD chart, I would love around 40 cents. Still think we do come back down here at some point. If we have an SR flip of 56, then short term, I think the likelihood of making a higher high is more probable. In that case, I would just take profits and probably move my stop to entry. Long-term accumulation probably doesn't happen here. It's probably shorter term, look to take profits, buy back in lower, with a close eye on the Joe BTC chart. I think what could happen though, in the chance that that scenario does play out, and there is an SR flip, let's say we come here, bounce higher, we're probably going to see something like this. So Joe is probably going to come down a little bit on its BTC pair, bounce, make a bottom on this low of Joe BTC, reclaim this level, make a higher high on the shorter time frames, and then push back up to highs here. It's probably what it's going to look like. So you want to trade in confluence with BTC, but in general, it's in an uptrend, same as RPL, same as Render, same as INJ. These type of coins all in uptrends, and for good reason as well. So you're not buying a weak coin. What else do we have? All right, we've got a couple other things, but I'm going to get to questions now because that's largely what I've prepared. So now we'll get into the questions. Miles, do you agree with investing by virtue of wavelength? High lows, big swings. I'm not exactly sure what you're asking. You're talking about swing trading? Maybe you want to clarify that. But I do believe if you want to swing trade, it's definitely one approach to the market that you can take, just trading ranges on Bitcoin. But maybe clarify if you have an exact response. What about Solana DEXs? I'm not bullish on Solana DeFi at all. I'm bullish on Solana gaming, and that would be the only reason why I would invest in Solana. In terms of Solana DeFi, and you can see it, it's not bullish. So no, not really bullish at all, man. I'm just going to keep it 100 with you because this DeFi situation is not good for Solana. I mean, it's got less TVL than DeFi chain, Kronos, Phantom, basically everything. CRO collab with Samsung. CRO, Samsung. They did. I'm just not a huge fan of like centralized exchange tokens. But like, yeah, if you like CRO, I'm sure it's a decent buy. Parking my USD in PAX-G. Thoughts? Pax Gold. So is this gold issued by Paxos? The gold on the blockchain. Well, Paxos issued BUSD. They're audited. Yeah, so really, okay, so the first question is, do you want to own gold? That's the first question. Do you want to own gold? And I own gold. I think gold's a great investment, but it's more so for someone with money, like decent money. For me, I have to start considering capital preservation, right? Because I don't just want to go full risk on. Whereas if you're in a position where you need to make money, then maybe you don't want to go safer on gold. And gold's already at highs, so now wouldn't be the time. Like, if we're just looking at from a trader's perspective, maybe now isn't the time to ape in. But yeah, gold, I think it's always going to be a solid performer. Long term, I'm bullish. Gareth Soloway's bullish this year of gold hitting new highs. So yeah, that's your first question. Second question is, if you want to buy gold, how do you want to do it? Real gold's kind of out of the question. It's too difficult and too much of a security risk, and then you got to pay storage cost. So then your question is, do you want to go through the stock market, through a gold ETF, or do you want to go through like Pax Gold on the blockchain, which you can actually trade on exchanges? Then you open yourself up to exchange risk. I don't know. Depends on. Just be aware of the risk. But yeah, if you want to buy gold, it is a proxy. Okay, let's look at CRO. I just don't know if Crypto.com. I've never liked the exchange, and I just don't know if it's like the I mean, it's an okay exchange. I just don't know if it's the next. I don't know. I don't know if I'm more bullish on it than BitGet and OKX. I'm probably not. I know they have a chain, but yeah, I don't know. Anyway, completely irrespective of my thoughts, if you're a trader, you want to trade this, then honestly, this looks freaking good. Wait for this breakout, and I think you are I think this isn't a bad trade. I would take... Okay, so here are my TP zones. Let's make this bigger. Okay, first TP, 9%. Second TP, 20%. I wonder what market this is on if we want to trade this. I know it's on crypto.com, but is it on ByBit? No ByBit, are you serious? Okay, it's on OKX, but that's a BTC pair. I wonder if that's leverage OKX. Okay, it is on OKX. So there you go. You can trade that on the OKX for the OKX giveaway. If you want to trade, not on ByBit though, so it's not a comp trade, but it can be a giveaway volume trade. It is. Someone said it is on ByBit. No way. Why isn't it here? Hold on, am I missing it? Oh, it's just Chronos. No, that is the same thing. Why isn't it here? Okay, it is on ByBit. Well, let me check if it is on my phone. Why isn't CoinGecko... So this is my question. Oh, spot. No. It's got perps. Okay. That answers my question. Okay. Doesn't have spot, which is weird, but it has perps. Okay, so you can trade it on the ByBit and the OKX comps. You can do it. So that's my setup. How would I execute this? I would open some on the breakout, some on the retest, invalidation below. And then the next, and then I would TP here. Once, if we do move up, I move my entry higher. So yeah, this actually might be one I trade. On the 4 hourly, it's got a little bit more to play out. Let me just get this daily. So yeah, I actually might open this on I'm gonna set an alert, and then I might look at this on the ByBit comp. You're already long. Nice. We could get rejected here. If you're already long and you've got this whole move up, maybe TP into this, and then hopefully we get the breakout. Let me make this on the hourly chart as well. So that is your trend. Actually a good trend, respected on the daily and the 4 hourly. Just get the moving averages here and see where we sit. Yeah, okay. This could play out today. This could actually play out today. So I will probably take this trade. Good suggestion. Also on the daily, just broke above. 200 MA looks good. Looks good. I like it. We are heading into resistance. It's the only problem. But look, if you move your stop to entry after the pump, I think you're chilling. You can probably chill there. So that's on ByBit. Bitcoin next move when? Look, I think for me, my next play on Bitcoin is probably a short at 30.5. Or a long. I mean, I'm already long from 27. We talked about this blue box I've had on the show actually before we dropped. So I didn't just put it in now. It's been there for a while. You guys will know if you watch the show. So we're already long a little bit, not much. And then we'll I mean, this, okay, either we short here or we wait for the pullback to this level and then we look for like a bounce. But these are both small trades percentage wise. They're not big money trades for me just because it's not like high, like I think we're in a range, right? So I'd much rather long here with bigger money, short here with bigger money. And we might just do this range thing. But yeah, those are kind of my zones for now. Looking pretty bearish. Well, it's bearish if we double top here. So it's bearish or if we make a lower high, if we come in here, reject. Even if we reject now, bearish, right? Why? Lower high, lower high. So what you really want Bitcoin to claim this level. That's why I'll probably, if we go a little bit higher, I'll probably short. If we just make that push up, deviation above, short. But that's not a high conviction short, as in like cash wise, I won't put like fuck ton in. Yeah, Christopher, you're long from 17. You're chilling. I'm long ETH from 1,000. I'm chilling. So I'm assuming that's spot. Just hold that, accumulate that. If you're leveraged long from 17, I hope you've taken profits. 75x short. Oh my god, 𝗕𝗏𝗧𝗏, you're crazy. Where are you in the ByBit comp, though? Where are you on the ByBit comp? You doing well? One day close lower high already. So yeah, we're on the daily. We're on the daily. And we did get a close below. This weekly's still open though. Maybe we get a weekend move. I doubt it, but maybe. Look, I'm not a TA expert, 𝗕𝗏𝗕𝗧𝗏. I just use it as a risk management tool. But thank you. Thanks for the compliment. I'm getting better, certainly getting better. When altcoin, I talked about that extensively earlier in the show. If you missed it, TLDR is still Bitcoin's time to run. DOM performing strongly, ETH, BTC rejecting. These are my two targets for ETH, BTC. Earlier in the show, I discussed that much bigger, much bigger context. But I'd also talked about a few alts that I think are outperforming as well. Bonk. Look, I can't say anything fundamentally about this thing. I know it's 𝗕𝗏𝗕𝗧𝗏. What the hell? It's crazy. Don't know what's happening. Bonk coin. Bonk, bonk, bonk. Why is the FDV so high? Bonk swap. Bonk. I don't know. I'm bonked out. Let's look at 𝗕𝗏𝗕𝗃 though. No. Okay. Let's look at 𝗕𝗏𝗕𝗃 though. 𝗕𝗏𝗕𝗃. No, not Don Pepe. I want 𝗕𝗏𝗃. The real 𝗕𝗏𝗃. 𝗕𝗏𝗃 coin. Let's get it on CoinGecko. Then I'll go into Dex Screener. This is the best way to do it because there's a lot of fake pairs going around. So we'll go on to Dex Tools. And we'll go into CoinGecko. It has come down a lot, 𝗕𝗏𝗃. But it did have that blow off crazy top. Still performing pretty well. Yeah, you can't even chart this on the daily. You have to go like 4 hour or hour. Wow, Dex Tools is horrible to use. What the hell? The scrolling is horrible. You can barely do TA on this thing because the wicks. You can't really do TA on this thing. You can't. Looks like one big flag though. If you want my visual opinion. Yeah, you really can't do TA on this thing. You actually can't. You kind of can a little bit, but it's not going to respect these levels. If you're into memes, this probably isn't a bad buy soon. I'll probably buy some. Just for fun. Really just for fun, though. Kronos Amazon partnership. Yeah, I mean, partnerships are often just optics. That's the problem. AWS. Yeah, AWS is with AVAX as well. Stop fading Casper. I'm not fading Casper. Price has performed really well on Casper. However, yeah, I don't know. It's just not on my list. I don't know if I fade it though. I don't know. don't like it. I've done a bit of research on it, so I can't speak too much to the fundamentals because I've only done a little bit of research. But from what I have heard, it seems I don't know if there's like a huge differentiator versus other similar protocols. I don't know what their moat's like. And for that reason, and I know you can make the same argument of any L1 or L2, but it's not bad. It's not bad. I'm not fading it. It's just not on my list. Like, I don't know. You've kind of got to come up with a you've kind of got to be very selective in crypto. And it has pumped a lot as well. All right, I'm going to head off now. I've got some stuff to do. I'm sure you guys do as well. And I don't want to take up too much of your time, but I hope you found this video interesting. We covered a lot. We went macro. We went altcoins. We did everything, basically. Hopefully, this gives you more of a feel for where we are in the market, my thoughts on alts. Hopefully, I explained kind of my feeling on the alts well. I think it's pretty clear now with ETH, BTC, and BTC DOM, at the next levels we can look at for the alt market. And yeah, I'm hoping we get a big move, confirmation move, either way for Bitcoin soon. And that will like help us a lot in the trading comp, which, by the way, there's a link in the description to that if you want to join it for ByBit, and also the comp, which is just the giveaway for OKX. Also, PrimeXBT joined our show as a sponsor. They're another great exchange. I don't know if you've used them, but very, very good UI as well. If you do want to trade over there, let's say you're in a country where you can't trade on ByBit or OKX, if you want to trade over there, then there is a deposit bonus running right now where if you deposit 500 within the first 48 hours of signing up, so if you make an account using the link, sign up, then you can get a $100 free bonus to trade with. So deposit 500, then you get $100 in your derivatives account for free as a welcome bonus to trade with. So if you are trading and you're looking for an exchange, I don't know, if you don't want to KYC on ByBit, etc., PrimeXBT might be an option for you. And there's a link in the description as well to that. $7,000 sign-up bonus if you use the Miles promo code, and you get $100 as well if you deposit 500. I think that's basically it for now. I'll just quickly check what's happening with Bitcoin on the hourly chart with Asian Open happening in 2 hours. Basically nothing. So nothing to report there. But obviously in the next couple of days we will have news there. Thank you guys for watching. I will see you in the next show, which will be probably on Sunday. And until then, have a lovely day. Peace out.